Choksey is also joining us. Deven, good morning. Thank you so much for your time. Let's start by talking to you about the IT space. You know, there is one section which believes that the stocks are actually running ahead of themselves. The managements are not as positive, but the street is turning way more positive regarding these stocks. At that time, there is an underperformer on the large cap space, which is Wipro, where there are, every now and then some buzz coming in, some top leadership changes, etc. How do you look at Wipro out of the entire IT pack, which has underperformed many of them?
Yes, Ajay. Good morning. Well, I think typically in case of the Wipro vis-a-vis the entire top-run IT companies, where the top-run companies are basically thriving largely on the inorganic way of growth. They have systematically, I think, created their presence in different verticals, including, I think, the verticals which are the AI, the AGI verticals. And as a result of which, they've been winning some of the large size contracts. So I'm not completely surprised that some of the large companies like TCS, Infosys, etc., are basically getting relatively, I think, better amount of order inflow, and the confidence is returning back into the business. Vis-a-vis that, Wipro has moved on with the inorganic growth approach, and they have in last 2 years also we have seen significant amount of integration related challenges that they have seen, and at the same time, I think they have also lost significant amount of talent in the process. So Wipro is remaining, I think, a challenging one as far as I think the outlook is concerned. Though the business condition is improving, though the customers I think would probably start putting in the large size orders of a long tenure, but at the same time, I think the company remains slightly more challenging at this point of time, particularly in form of getting the right kind of talent for the job, and at the same time, I think sustaining this inorganic growth engine that they've built. So I would rather put my money as a particular in the mid-tier IT companies where engineering and R&D space remains relatively more clearer to all of us. And as a result of which, I think we are seeing at least 3 to 5 years of visibility for these companies with a larger growth rate. Vis-a-vis, I think the frontline companies which are likely to grow, TCS, Infosys kind of companies are likely to grow about 15%. But the fact remains that I think their mid-tier peers I think are growing about 25% rate of growth. So I think we would prefer more amount of actions over that space at this point of time.
Talking of Oil India and ONGC, Deven, it's a for a very long time ONGC, Oil India kind of companies, they never shared their outlook and guidance, but we saw Oil India come out after a very long time and did speak about visibility on volumes front this time. Part of that rub-off would also seen on ONGC. How are the valuations looking right now for both of them, or would you bet on any of them?
So I guess I think the important aspect about this company's business is that whenever the crude oil prices I think softens, I think there is a little better amount of comfort vis-a-vis I think when the crude oil prices goes up, largely because of the fact that I think they are not allowed to cap the higher amount of earnings when the prices go up. So as a result of which I think one or the other way in which the government policy actions could possibly start bothering them, including I think the likes of windfall taxes. So to a greater extent, I think one would remain extremely wary about predicting this kind of company's business beyond the point. So the best way to look at this business is where the government intervention is high, and I think the policy measures are driven by largely the government's intervention. We prefer that I think this company should be looked at from the point of view of the volume growth that they are producing, and whether this volume growth is sufficient enough in growing the size of the balance sheet. That is where probably I think one can argue from. So largely commoditized business. As far as the current valuations are concerned, my take is that they are fairly valued. And I think the election period is now getting started from the next month, wherein probably we are likely to see the election related, I think, announcements coming in, and thereafter probably all companies would not be allowed to, I think, change their prices for some 4 or 5 months. So given that kind of a situation, I think we would stay little away from it. Though for the traders, I think this may make sense that any correction in the downside, I think probably make buy opportunity. And likewise, I think when it rallies, I think one would sell. But being investors, I think we would stay away from this commodity movement in given situations.
Alco Bev category. It is also that time of the year when general consumption, of Alco Bev actually goes up. Look at not really Sula vineyards, but look at how Radico is doing. maybe United Spirits closer to 1100 now. Even the beer company, United Breweries and Soam have actually done very well in the last 6 months. And now there is a very interesting development. I'm not saying that it will boost their volumes a whole lot, Deven, but Gift City, parts of Gift City becoming much more accommodative and allowing alcohol, serving of alcohol in certain pockets. Does it come as a surprise for you?
Well, Ajay, it has not come as a surprise because I think unless you create a social infrastructure in IFSC like this city, probably you will not be able to attract and retain the talent in that particular area. That is where I think one of the condition is alcohol. I think within the social infrastructure requirement. So to a greater extent, I think that is where probably I think the move has been taken. And I believe that I think it will play out eventually. But the fact remains that I think the gift city as a place, I think for working, could possibly assume significantly high amount of traction, and that could possibly make sense that higher amount of financial activities could sooner than later be shifted into gift cities. I'm not too sure about I think how alcohol beverages I think would probably play out in this entire thing completely. But the fact remains that the financial markets I think are likely to look at gift city with much higher amount of confidence than ever before. I think that we have seen in last 10 years.
Devin, you've been a market watcher for the longest time. Talk to us about, do you think we have the infrastructure in place for this to happen, and what do you see the impact of this to be like?
So, Anisha, in a lighter tone, I think in our country, I think we first, I think, create the product and then the infrastructure gets built. I'm not going to be very surprised. I think this infrastructure is going to get built over a period of time. However, the most important part out here that I think this particular move is likely to work for the investors much more significantly. When you settle the trade on the same day, probably I think you bring in significant amount of market confidence, and the integrity quotient will probably increase significantly. So, all from that point of view, I would think that it is going to benefit the investors the most. Whether I think we have requisite infrastructure at this point of time in place, I think it will have to be tested. In my viewpoint, the clearing corporation, the brokerages, and the banks, and all other stakeholders which are involved into this particular activity, including the depositories and the stock exchanges, will have to be tested on this particular infrastructure that one is talking about. One would like to believe, given the experience of past, that even though initially I think there might be hurdle, but given the kind of spirit at which I think this particular move has been taken, I would remain rather more optimistic than otherwise in getting the benefit out of the T plus zero settlement system. Eventually, I think which will benefit all the investors.
Deven, another news which became topic of the discussion over the weekend was UPL. Now they want to do a 4,200 crore worth of rights issue. They did a buyback last year, and this comes in the middle of the environment. We all know chemical stocks are amidst all the negativity around China dumping. They've cut their guidance recently. But at a announcement of rights issue, everybody is taking it in the way that promoters will actually get to raise their shareholding at a low valuation when visibility is bad. So actually, it is being seen as a positive. How do you analyze this announcement?
So there are two aspects to it. I think one is UPL overseas. Second is I think UPL the current avatar which we are having. I think largely the UPL overseas is basically banking on the UPL India for the purpose of sourcing of their APIs. And as a result of which, I think they would be possibly, I think, manufacturing or blending or formulating this particular chemical entities, I think, in respective markets of the world where they are present in different continents. So to a greater extent, I think what might happen, and this is what I think is what market is not liking, that India becomes a fixed price supplier to the UPL overseas, where the larger amount of opportunity is also there in form of market pricing. That part I think is being taken away, and that is one of the reasons for which I think the stock has been I think underrated, underperformed now. So to a greater extent, I think that threat remains. Now, whether this right issue is largely to free up whatever the debt components that have in the balance sheet, or whether this right issue is largely intended for higher amount of capacity expansion. I would like to believe the former is true than the later, because already significant amount of capacities have been built. In fact, I think as we talk today, in the given situation, some of the capacities have remained idle for some time for UPL, and that has been reflected into last couple of quarters results as well. So in my viewpoint, unless the money is channelized largely for the growth, I think one could not probably, I think, take a larger step in building the confidence into the portfolio. On the other side, I think if you are retiring the debt to a greater extent, I think that part would probably result into the higher amount of comfort level on the cash flow side. So the promoter will get a chance in this particular situation to raise their equity at the same time. I think, if possible, I think the unsubscribed part of the right issue, I think they may get a chance to subscribe to that particular equity. So that is one possibility that one cannot rule out.
What do you make of the ferocious move that we've seen this past year on the entire PSU basket? Do you believe that there's merit in still looking for opportunity within this space?
Avan, this is something which we have always seen in past also. Then when the other side of the market becomes expensive, the PSU would probably start catching up on the valuation side. I have always maintained that the PSU companies on the business model side, I think they remain absolutely good and convincing. I think there is no second question asked for that particular aspect. However, these companies, they lack the consistency in producing the growth. Fortunately, this government has made, I think, most of the PSU companies more accountable for the growth. And that is one of the reasons for which the market participants, the investors have started buying into some of the PSU companies, because there is a visibility of growth that one is seeing. Vis-a-vis the private sector player, I think these companies probably, I think, they require to demonstrate their amount of growth. If that is so, then I would justify the kind of rally which is right now in place as far as I think the PSUs are concerned. Otherwise, one would term it as, I think, a catch-up rally, and probably valuations at this point of time in most of the PSU companies have become reasonable. If they were yesterday, I think they were discounted or lower valued. Today, I think they are reasonably valued, as I would like to call it as. Maybe case to case, one will have to look at the companies from investment perspective.